Hey, welcome to The Explainer. Today, we're diving into a really fundamental concept that can bring a ton of clarity to your trading charts. We're talking about the break of structure, or as you'll often hear it called, BOS.
You know that feeling, right? You're staring at a chart, the price is jumping all over the place, and you're just guessing, hoping you can catch that next big move before it's too late. It's a super common frustration, but trust me, there's a much better way than just crossing your fingers. And that solution is all about making a shift, moving away from guesswork and toward looking for actual confirmation from the market itself. This is exactly where the idea of a break of structure comes into play. Think of it as a simple visual clue that helps you read the story the chart is trying to tell you. So, what is a BOS? Exactly. Well, it's a confirmation signal, plain and simple. When the market is in an uptrend, a BOS happens the moment the price pushes decisively above its last high point. And in a downtrend, it's the exact opposite. It's when the price breaks below its most recent low. The key thing to remember here is that it's not a prediction. It's a confirmation of what's happening right now.
Okay, to make this crystal clear, let's use a really simple analogy. Just imagine that the market's trend is a giant staircase that you're climbing.
So if you're climbing that staircase, how do you know for sure that you're still going up? Well, you have to take a step that's physically higher than the one you were just on, right? Each one of those new higher steps is a confirmation of your upward direction. A break of structure on a chart, it's literally just the market taking that next step up on the staircase. All right, so the theory makes sense, but how does this actually look on a real live trading chart? Let's switch gears and get practical so you can start spotting a BOS with total confidence. Spotting a break of structure in an uptrend is a pretty straightforward three-step process. First, you just find and mark the most recent peak. You'll hear traders call this a swing high. That level becomes your line in the sand. Step two, you just wait. You watch for the price to come back up and challenge that level. And third, the moment the price closes decisively above that high, boom, you've got confirmation. A break of structure has just happened. Now let's actually apply this to a chart. So what we're looking at here is a market that's in a really clear uptrend. You can see the price is moving in a series of peaks and valleys, and each one is generally higher than the last. See, right here? The price creates a high point. Then, after a little dip, it rallies again and breaks right through that previous high. That's our first BOS. Then what happens? The whole process just repeats itself. It sets another high, pulls back a bit, and then breaks it again. Every single one of those breaks is the market screaming, hey, just so you know, this uptrend is still going strong. And this quote really hits the nail on the head. The whole point of a BOS is to confirm the trend's direction and, crucially, to help traders stop trying to guess where the market's going to turn around. The goal isn't to be a fortune teller and predict the exact top or bottom, it's to trade with the momentum that's already happening. So, what this does is it creates this massive mental shift in how you approach the market. Before you understand BOS, you're often just guessing about a reversal, dealing with a ton of uncertainty. But after, you're trading with a structure. You go from reacting to every little bit of market noise to confirming the bigger trend, and that naturally builds your confidence way up. This brings us to the most important part, the so what. Why does this one little concept matter so much? Well, it's because it's a foundational piece of the puzzle. It helps you read the market and trade with a clear, logical plan. Look, if you take away just one thing from this entire explainer, let it be this. The single, number one most important job of a break of structure is to confirm that the current trend is still alive and kicking. It's the market's way of giving you the green light to keep thinking in that direction. So let's just quickly run through the key benefits here. A BOS confirms the trend is still on, which helps you avoid fighting a really strong move. It gives you a specific, logical point on your chart to base your decisions on. And maybe most importantly, it replaces that awful feeling of anxious guesswork with solid evidence-based confidence. So there you have it. We've walked through what a break of structure is, how you can spot it, and why it's such a game changer. The only question left isn't for me, it's for you. Now that you can see this clear signal on a chart, how are you going to use it to trade with more clarity and a lot more confidence?